Hi everyone, it's Ryan McGlone out of Bend, Oregon, and thanks again for tuning in to another monthly real estate market update. What an amazing start we've had to October so far this year. The weather has been absolutely incredible in Central Oregon. Beautiful sunny skies for most of the day so far this month, and it looks like the rest of the month is going to be the same. So a perfect opportunity for us to all get outside and enjoy some of this amazing weather we have and wrap up the end of our fall here before we head into a little bit colder temperatures and maybe spending a little bit more time indoors. So now as we turn towards what's going on in the markets, well, I think there's a lot of anxiety out there right now, and it really doesn't matter what market you're looking at. Whether you're looking at the equities market and the stock market, you're looking at real estate, you're looking at business headlines in general, there's a lot of conversations about the looming inflation that's still headed our way and continues to be persistent, as well as talks about recession, and of course, a housing market that's in transition and starting to slow down. So here at the McGlone Property Group, we have teamed up with two local experts in Central Oregon to hopefully provide our clients with some clarity around what is going on in the local real estate market as well as the local economy. So we are going to be presenting on October 26th an event called Sips and Tips. It's going to be held at Broken Top Bottle Shop starting at 7 o'clock p.m. and we have two guest speakers that will be joining us to help guide us through what is going on locally here in the real estate market in our economy. Those guest speakers include Damon Runberg, who's the chief economist for Business Oregon. He's also the owner of East Slope Economics. He is highly respected in his field and is often called upon other businesses and other organizations to present all over the state of Oregon on what is going on locally here in our economy. And our other guest speaker is Donnie Moniger. Donnie is the owner of the Beacon Appraisal Group, and he's also the author of the Beacon Report. Now, Donnie's Beacon Report has become incredibly popular here in Central Oregon. It's used by just about every realtor to keep an eye on what is going on with housing prices, and he is often looked upon to present once again at larger business groups and organizations within our community. You'll also see him referenced quite a bit when you're seeing any articles on real estate in any sort of local publication. And so we're very excited to have them here. I think it's going to be an incredible evening, very, very insightful, and hopefully it does provide us all with a little bit of clarity and a little bit of further education as to what is going on here in our local market. Now, as we take a look at the numbers that we just got for September, it's very much what I've been expecting and what we've been talking about the last couple of months. So the median sales price for home in Bend actually ticked up a little bit into the low $720,000 range, but there are a lot of signs in these numbers that is short-lived and that we should expect to see that trend down as we move into October and November. Probably the most notable sign is that the average list price for a home that went pending last month actually came in at $689,000. So that's a pretty huge step down from where it was earlier. And when those homes close, we also know that the average home, or that most homes are closing at about 98% of list price. So we could very well see those homes closing below that $689,000 mark, which would put our median sales price, once again, down pretty significantly, similar to the trend that we've been seeing the last couple of months. The other trend that we're still seeing, which we've seen now for 3 months, is a large reduction in the number of new listings to market year over year. So for 3 months in a row now, the number of new listings to market is actually down over 25%. Once again, last month in September, it was actually down close to 35%. So we can see that fewer and fewer people have the desire to list their homes right now. Some of that is interest rate driven. And some of it's probably also just general economic anxiety driven. And as we know, the one thing that is helping our market as we see the number of new listings drop is it's helping balance our inventory velocities. So we came in the month of September with inventories trending at about 2.4 months of supply, and that is right in line with what we saw in both August and in July. So fewer listings, a lot of buyers who are stepping out of the sidelines right now, but the fewer listings are helping offset that number of transactions, and inventory velocities are remaining relatively stable. So when I think about sellers that are out there right now and they're looking to finance homes and looking to purchase homes, and interest rates, by the way, are now well above 7%, it's a bit scary out there, and a lot of sellers are backing off. And folks are often asking me, if I'm a seller, should I be looking to buy a home right now? And in some cases, I would say absolutely yes. I still firmly believe that if you are a renter in our market, or if you are transitioning and relocating from another one of our feeder markets, let's say Seattle, and you just sold your home, I absolutely do think that both renters and folks that are transitioning here should be looking to purchase homes, even with rates where they are at. And one of the big reasons for that is because by purchasing your home, you're going to be locking in and controlling the largest monthly expense that most families have, which is obviously your mortgage expense and your housing expense. And as we see fewer and fewer buyers back out of the market, fewer and fewer buyers purchasing homes, those buyers have to have somewhere to go, and what it's going to do is it's going to put some demand on rentals, and we could see that push rental rates up. So once again, by purchasing a home and owning and occupying your own home, you are controlling that large expense for you. Now, I do think if folks are out there buying homes and they're owner occupants, they should be doing so with their budget in mind and making sure that they're in it for the long haul, and they're going to be holding on to their home for 5 to 10 years, just to make sure that they do build that equity that we do consistently see when individual homeowners do hold on to homes for the long term. Obviously, the other people who should be buying right now, I believe, are cash buyers, and that could be owner occupants or investors or second home buyers. As we've seen prices come down from the highs earlier in April, there are some good deals to be had out there. And as it's always hard to say how far down the market is actually going to go before it tends to level out. So the nice thing about purchasing right now, if you're cash and you're looking for a deal, you do know that you are at least purchasing your home when the market is a little bit lower, which isn't always the case. And like I said, it's really hard to say if this trend is going to continue for another 5 months, 1 year, or more. And most of the national forecasters out there that are looking at home values actually expect home values to be flat in 2023. So if we're down a little bit already, it's a good opportunity for cash buyers to come in and scoop up a deal. So now what about sellers? Like I mentioned earlier, we're seeing a lot of people hold off on listing homes and selling homes. And do I think that now is a good time to be listing homes or selling homes? Well, for starters, if you're someone who's always wanted to sell your home at the height of the market, right now is a great time. Now, when you look at the data, obviously, home prices are down from our peak back in April by about 10 to 12% right now. So, Ryan, why are you saying we're at the height of the market? Well, if we were to expand our time horizon of what we're looking at to really assess whether or not we're at the height of the market, home prices have been increasing anywhere from 10 to 20% for the last 7 or 8 years. So if we were to look at the graph of home values, and our little dip right now of that loss of about 10% would just be a tiny tick at the top. So it still is a great opportunity if you're looking to cash out of an investment property, if you're looking to sell a second home, if you've already bought a primary residence and you haven't sold your primary residence yet, this is the perfect time to list and take advantage of what is a rather strong market. Now, the other group of sellers that I think have backed off a little bit that really should be looking to sell homes right now are those that are looking to protect their capital gains. So as we know, most owner occupants, if you're a single owner, the first $250,000 that you make when you sell your home usually is tax-free. It's protected capital gains. For a married couple, that's a $500,000 tax break that you get on the first $500,000 you make when you sell your home. Well, if you're looking to upgrade and buy your next home, and you are close to that capital gains mark, and you sell now and you move into that next home, that capital gains clock starts over. So let's say your home right now, you're going to walk away with $250,000 if you sell it today. You're thinking about buying that next home, but you're holding off because of interest rates. If you make that move now, yes, your interest rate might be a little bit higher, but as we come out of this housing transition and house prices start to go up again, all of that gain you're going to get is going to be tax-free up until that $250K mark that you hit again, right? And so there are some advantages to still make that move now, even with rates high, to help protect your capital gains. And of course, whether you're looking to move out of a rental or you're playing that strategy to protect your capital gains, there's probably a high likelihood that rates will settle back down below that 7% threshold, maybe back down to the 5% range sometime within the next several years, at which point you could refi and get yourself back into that lower mortgage payment. So I do think there are some very, very good use cases for both buyers to continue to purchase and sellers to sell homes. It's just making sure that the scenario is right for you. And once again, as I always say in these videos, if you have a very specific scenario that you would like to run by us, please give us a call, shoot us a text, send us an email. We would absolutely love to help you out. And of course, if you're looking for a little bit of clarity as to what's going on here locally in the real estate market and what's going on in our economy, we would really appreciate it if you would jump on the link below and register for our Sips and Tips event. Once again, that's going to be on October 26th between 7 and 9 p.m. at the Broken Top Bottle Shop. And I guarantee you, if you've ever seen our two presenters talk before, it's going to be great. It'll be very, very insightful, and I look forward to seeing you all there. If you can't make it, thanks again for tuning into this video, and we look forward to talking to you in a month.